Hey, what's going on, guys? This is Sam Kwok here, one of the Kwok Brothers. Now, lately in the YouTube community, there's been a lot of videos and conversations surrounding the fact that the housing market crash is here, or at least the housing market is starting to shift. So, of course, naturally, being curious that I went into my research mode and started looking for data and numbers and my analysis to really validate if that's true or it's just a hoax or people are looking to get views. Now, after hours of research, here's my findings, my analysis, and my conclusion as to is the housing market crash really here, or is this just a hoax and rumor? Just, obviously people looking for views and fishing for subscribers.
Today I am going to make a new video, so please
So with that being said, you guys can continue supporting us in our channel in finding the latest housing market news, best tips for real estate investing by subscribing to our channel as well as liking. And of course, throughout the videos, go and leave your comments down below if you have any questions or your own thoughts and opinions about our findings. So the first data that I found from Redfin.com does show that the housing market is starting to slow down just a bit. This is from the fact that between July 5th through July 11th, we are seeing a decrease of 6% in pending home sales. And typically, we do see natural decline in pending home sales towards the winter month between October through December because people don't want to move during winter months. And pending home sales and new listings are cyclical, meaning that we see a large amount of listings enter into the market, usually around March to April time, right before when families move for new schools and, of course, new job opportunities. But what is an anomaly is that we're seeing this decline now rather than later towards the winter months. So there's a couple hypotheses and opinion and my analysis as far as what's happening. Number one is that there's a natural decline in demand and the buyer's pool have somewhat exhausted, which I don't think is likely, but still in the realm of possibility. The second thing is that the buyers have pretty much given up and said, you know what, I'm just gonna go rent. I'm gonna go ahead and wait for a couple more years until this housing market crash. And it's pretty much becoming a common knowledge and common understanding that buyers would have to wait probably next year or two until we see a natural decline in prices. We'll get to that in 1 second as far as why the home prices won't actually naturally fall. So overall, the hypothesis I have is that buyers, or the demand, is waning down just a bit, mainly because buyers, again, are not willing to pay for the price that we're seeing right now. We're seeing buyers pretty much being sidelined and going back to renting, which primarily is the cause for driver for rental price increases. We talked about that in the past Monday's video. We're seeing demand slow down just a tad bit, and that data and that hypothesis is being supported by the fact that we're not seeing a large influx of listings and new active listings as I'm indicating in the chart that I'm showing you guys right now. So as you can see in the chart that I'm showing you right now, the inventory as far as national housing is still at relatively really low if you look at the past 9 years. Yes, housing inventory has been naturally decreasing, but if you look at the last 6 months, we are at the lowest point in terms of housing inventory in compared to the last 9 years. So seeing that inventory hasn't gone up that much and it's still staying stagnant, and yes, some articles out there are saying that we are seeing an increase of inventory, but we're still at a relatively low inventory amount. But seeing that pending home prices fall with inventory staying relatively the same, that tells me that the only variable that could have changed is demand. So my analysis as far as what's happening to pending home sales falling has to do with the fact that buyers are being sidelined, they're choosing to rent instead temporarily, and they may come back next year or the next to buy and to come back to buying a home. And right now, I'm siding with the fact that we're not quite done with the housing market the way it is. I do believe that we're gonna see a quote-unquote secondary wave come next year or the following year when we do see a little bit more inventory due to mainly because eviction moratoriums are coming to end. Now, just like what I talked about in my last few videos, I don't think we're gonna see a wave of foreclosures. We're gonna see more of tranches, meaning we're gonna see mini waves, a little batch of foreclosures happening at a time instead of a giant wave coming all at once. So as far as short-term housing market data, here's some data points that I'm paying attention to, and I'll keep you guys updated as things are moving and shifting in just a bit. Number one, I'm looking at the inventory. We need to see the inventory climb back up to pretty much the pre-pandemic levels. Without inventory coming back up, we're not gonna see much of the home prices fall back down. Number two is I'm paying attention to the interest rates. Now, one of the key drivers that I believe that's driving up the demand and what has been a driving factor for the last 12 months has been the low interest rates. Right now, the federal fund rate's at 0% with bank margins anywhere between 2.5% to 3%, meaning that you can probably walk away from getting a conventional 30-year residential mortgage closer to 2.8 to 3% interest, although the interest rates has gone up slightly bit in terms of the margin rate goes. So we're paying attention to that. So as we see interest rates do go up, we may see the demand go down as well. And just like how I believe that inflation might be transitory, I think this housing market boom that we just saw in the last 5 months may have been transitory as well, mainly because during COVID-19 pandemic, a lot of sellers didn't want to necessarily list their homes and didn't want to see buyers walking in and exposing themselves with potentially COVID-19 virus. And I do potentially see that the inventory will climb back up to where it may meet the demand and cool the price down just a bit. However, we do need to talk about what could happen in the next 5 years or more in terms of long-term demand. Now, in short terms, I do believe that the housing market price will come down. We were at pretty much an inflection point. Pretty much we were at a peak and we're going to start to come down just a tad. It's not going to be a crash. Okay, let me put that aside. It's not going to be a crazy 30% swing like we saw in 2008. I do believe that it's going to be a slight dip. We're going to see maybe 10% dip in terms of home prices, and we're going to see more of a stagnant. But in about 2 to 3 years and beyond, I do anticipate that the housing market price will go back up slightly and it will trend upwards continuously unless we do see another black swan event just like COVID-19. One of the main reasons why I believe that we're going to see a long-term increase in housing market prices and we're going to see more so a warm housing market is due to the fact that we have an overall housing market shortage across the United States. Now, I will preface, and the caveat to that is that there are certain metropolitan areas where we're not seeing much of the shortage. Okay, that much we can agree. But there are key metropolitan areas such as Texas, Idaho, Utah, Florida, where they're seeing a major increase in population increase, mainly due to migration, and they are experiencing massive housing shortage. Coupled with the fact in the last 10 to 11 years, we haven't seen builders build enough homes. And if you look at the chart that I'm going to show you guys right now, we've seen record low number of new housing starts, meaning that not enough builders were beginning to build new homes to meet the future demand. So what I think happening now and will happen in the next 5 years is that because we haven't been building enough homes, we're now just experiencing the massive shortage from what we should have been building in the last 5 to 10 years. You know, there's a good old saying that goes, dig your well before you get thirsty. And my point is that we haven't been digging our well in the last 10 years and we're now just getting thirsty. Plus, we have Generation Z, which is massively huge. I mean, it's bigger than millennials that do have interest in buying homes. And because we can't meet that demand, now we're gonna see even more of housing market increase and housing market price increase in the next 5 to 10 years. And on top of that, the latest MSNBC news article shows that builders are hesitant about building new homes, mainly because of the increased raw materials like wood, paint, copper, and we're seeing increase of commodities across the board. So bottom line, we need both short-term and long-term housing. We need more builders out there building. We need more construction happening, building more single-family and multi-family homes right now. Because right now, we're definitely gonna see an extensive housing market crisis in the next 10 years if we don't build enough homes, especially in those key metropolitan areas where we've seen massive population increase, such as Idaho, Utah, certain parts of Texas, Florida, the Carolinas. Those areas desperately need new housing. So overall, I don't believe we're in a housing market crash. I don't think that's gonna happen unless, you know, you never know, another black swan event happens. COVID-21 could happen. North Korea can attack us. Who knows? Anything can happen. But as far as looking at the data and what I've been studying and what I've been analyzing, we're not really going to see a crazy housing market crash like we saw back in 2008. We're not going to see a crazy storm that a lot of these YouTubers are suggesting. We may see home prices cool down. Again, maybe 5 to 10% in some areas. In other areas, we're just going to continue seeing this housing market go up and up and up unless we provide more housing units, more inventory, more construction to meet the demand that's happening. So in the next 10 years, I'm gonna continue anticipating increase in housing market. We're gonna see more demand. We're gonna see rent increase. We're gonna see housing market increase. And with that being said, I do anticipate interest rates going up slightly, maybe by 1% or 1.5%. And I'm referring to the federal fund rate, by the way. So I do anticipate the interest rates do go up and things will kind of normalize, and hoping for a more balanced approach where interest rates are about 1.5%. Demand's still there, but it's not like crazy that, you know, like we've seen in the last 2 to 3 months. So that's what I anticipate. And that's what the data is showing and my analysis of that data. So if you guys have any thoughts, go and comment down below. Definitely share this video. By the way, we learned that YouTube algorithm loves sharing. So if you guys can share this with your grandma, share this with your grandpa. I don't know who you're gonna share with, but definitely help us out with our YouTube algorithm by sharing, commenting down below. And as always, we wanna provide the most accurate housing market data. And I'm not just here to, tell you guys these things. These data are highly important to my own company. As you know, Daniel and I run a private equity company where we invest in multifamily, we do land development, we build commercial buildings. So a lot of the research that we do and a lot of the data mining that we do it for even our own sake. So we put the money where our mouth is. So we try to give you guys the most accurate, reliable housing market data and analysis as possible. So guys, again, go and definitely subscribe, and we'll see you guys in the next housing market video.